Ladies and gentlemen, welcome to the Motivate Property Podcast. It is Wednesday, the 5th of November, 2025. I hope everyone out there is having a fantastic week. So guys, this week we're doing the market updates, right? Now that the third quarter for 2025 is over, we have all the data out from CoreLogic SQM research that I'm going to go through with you guys today, right? So that's really the intention of today's episode. Now, first and foremost, guys, I think for most people, looking around the country, it's pretty obvious that we are well and truly in a booming market. All right, so in other words, we are in our boom phase of the economic cycle. And again, my evidence for that, and I want you guys to sort of see this for yourselves as well. Firstly, property prices today are at a record high, right? So the total value of all properties in the country is about to hit 12 trillion for the first time ever. So that's the total value of all Australian properties. So again, very blunt indicator, 12 billion is a total, doesn't really kind of give us much substance, other than the fact that number has been substantially increasing over time, right? So again, to hit that 12 trillion, just goes to show that the overall values are appreciating, considering the fact that there is also more land available for use in Australia than there's ever been as well because of new developments. Now, at the same time, property prices, so the median prices in all the major cities are also at all-time highs. Obviously, except for Melbourne is probably one of the main outliers. Now, property prices have also been raising at the fastest pace in 4 years. That's from October 1st, so just over the last month, which has mainly been fueled by first home buyers. All right, so for those who don't know, there have been some new grants and schemes that have come out for first home buyers, mainly from the Labor government in the first home guarantee scheme. What they've essentially done is changed the thresholds. They've essentially expanded the offering, and lo and behold, most people would have seen the writing on the wall. It has well and truly ramped up the demand for property. In fact, as I sort of mentioned, we've been seeing prices rising the fastest pace in 4 years because of that. What you can also notice as well is shares. All right, so when you look at the stock market, you can also notice that shares are also at an all-time high. The third, kind of factor in this is also interest rates. All right, so right now interest rates are low. All right, they are also reducing. Now, when I say low, right now the RBA it's at 3.6%. All right, now you've got to keep in context the average interest rate is around 7.5%. All right, so the fact that interest rates are lower than the median and they are slowly trending downwards just goes to show that money is getting a little bit cheaper over time as well. All right, and again, there's a few things I want to talk about with this and unpack. So obviously on Tuesday just gone, that was actually yesterday, the RBA has paused the interest rates again. All right, now keep in context, when prices are rising, when shares are rising, the RBA will have an inclination to increase interest rates when things are rising. Why? Because the bigger the boom, the bigger the bust. What the RBA doesn't want is for property prices and share prices and assets to explode in value, because the harder they boom, the harder they bust. All right. So the idea is the RBA wants to increase rates when things are getting really expensive to try and slow the market down and prevent like a really, really big boom and therefore a really, really big bust. At the same time, unemployment has also been increasing. Right, so generally speaking, when unemployment is increasing, the RBA has an inclination to reduce interest rates. Why? It frees up money, right? It frees up businesses like ours, right? Where if money's cheaper, we can go and borrow more money as a company. That means we can now go increase our services, we can increase our staffing, we can increase our spending, and it allows businesses to grow. And obviously, business growth means that more people are employed in those businesses. And again, this is in theory. However, inflation being this annoying little topic that's been coming up over the last few years, was slightly higher than anticipated at 3.2%. So being the case that inflation is obviously higher than the norm, I would imagine that the RBA has made the decision to pause because, again, they've got these two kind of conflicting ideas. Asset classes are huge and getting far more expensive. You've also got unemployment, which is rising. You've also got inflation, which is rising. So it seems like what the RBA has done is they've made the decision to slow things down, keep things on pause. However, interest rates overall are still quite low, right, in comparison to where the median is. Now, the fact that they are low and they're on a slowly reducing trend, like from where they were a couple of years ago, fundamentally for me, this is really a trifecta when it comes to the markers on the wall to know that the market's booming. So overall, I think this is obviously a very good sign to see these things up on the screen here. in the sense that everyone's making lots of money in property, everyone's making lots of money in shares. Money is tight, but there are signs that it is starting to free up itself, and there's a lot of demand coming from first home buyers, right? So again, I personally can't see the market slowing down within the next 12 months, and that's thanks to the supply and demand, which I'm going to go through now. Now, in terms of supply, right, so new construction approvals have declined in the past quarter, and they're down 12.5% for the year. So right now, today, we're short 60,960 homes, and we're on track to be short 400,000 homes by 2029. All right, so in other words, we simply don't have enough houses in the country for all the people. All right, hence why prices are increasing at a track of knots. Now, last year in 2024, there was a total of 177,000 new dwellings completed. Now, a new dwelling is anything that's livable. So I'm talking a 1-bedroom apartment or a 10-bedroom mansion, all right? That's a new dwelling. The lowest in a decade. We need 223,000 new homes to meet the current demand. So we need 223,000. Last year, we built 177,000. So again, we are still drastically short. Now, I guess part of the question is, why are we short on houses? Firstly, there are huge labour shortages, right? So this is an inadequate pipeline of skilled workers, plumbers, sparkies, even builders for that matter, carpenters. Basically, we don't have enough skilled workers in the country to build the amount of homes that we require in the time that we need to. Secondly, you've got high material costs, right? Obviously, there's multiple conflicts going around the world. Each one of those conflicts can throw a bit of a spanner in different supply chains and make things more expensive. But at the same time, material costs today are more expensive than they've ever been. Financing, right? So thirdly, when it comes to the problem as to why people can't build enough homes is, like I was saying before about the banks, as interest rates get higher and as interest rates maintain, where they are, there's a 3% servicing buffer that everyone has to go through in order to get a loan. What that means, if interest rates from the bank today are 5%, they're going to assess you at 8%, right? And again, when you're going and taking out your mortgage at 8%, you haven't really got enough income to really show it to the bank, right? In other words, the amount of money in terms of servicing that you require is way more than what we did pre-2017. In other words, it's actually very hard to get money from the bank, right? One of the things that I'm hoping for, well, there's probably two things I'm hoping for when it comes to the lending system. Number one is I do hope interest rates come down a little bit more, because it means that servicing buffer actually comes down as well. So that means more people will be able to lend. The second thing that I can see on the cards, loan terms extending, right? So right now there's a couple of lenders, only a handful, that are doing 40-year home loans. Within our lifetime, I can see the writing on the wall that 50-year home loans will become the norm within the next decade or two. All right, it pretty much has to, and that falls in line with most of the rest of the developing world. Number 4, as to why we're not building enough homes: taxes. So there was a study that was recently done, and I've heard two figures be thrown around, about this, where when it comes to the cost of a new home, between 50 to 100% of the cost of that home is taxed, right? Or is chewed up in taxes. So what does that mean? That means that when we think about, let's just say, the raw materials getting pulled out of the ground, right? Let's just say, we pull out iron ore for the steel, or we're chopping down, trees for the timber, right? Firstly, you've got to consider the companies that are extracting the resources at the very beginning are paying tax, right? And mainly GST. That's 10% that gets kind of cut off top that goes straight to the government. Then when the material gets sold from, the first company to the second company to start producing those materials, producing the raw iron ore into workable steel, taking tree trunks into, let's just say timber that you can start using to manufacture furniture or frames. Essentially, you've now got the second business that's taken control of the pipeline, and they're getting taxed, in terms of the GST. Then it goes to the suppliers, who then sells it to the builders, and then there's GST involved. The builders go and purchase it, and they go and put the house together. Obviously, they're paying a shitload of money in trades and materials and all that sort of stuff. But again, you got to keep in context. Then there's that clip of GST that goes. The point is, by the time you take the product out of the ground, after it has exchanged hands 10 times and taking that 10% of GST every step of the way, by the time we get to the 10th transaction in that chain, you've essentially paid 100% in taxes from where you first pulled it out of the ground to now the user who's using that material on site. Now, obviously, there's not 10 chains in most cases for most materials, but for the materials that there are, that means by the time that the end users purchased it, there's already been 100% of the value of that already spent in taxes. So again, this is a huge problem when it comes to the current construction industry. You want to go build a house, pretty much half the money that's in that house has already gone to taxes because of the way that the system works. Now, not to say that's a good thing or a bad thing, because obviously we would think that most of our taxes are used for a good benevolent purpose through the government. They're going to use it and spend it wisely. Obviously, most of us know that's not actually the reality. However, what it does do is it does inflate the cost of the product, right? So that means that if taxes are that high to get a home completed, it's more expensive for the end user to purchase that home because of taxes. So in other words, if the government wanted to really spotlight this and put a microscope on the way that new constructions are taxed, the GST components, the employment taxes all the way through, there could be some low-hanging fruit here that the government can adjust to actually free up more money, make it cheaper to build houses and then be more houses built, right? But like I said, that's probably number 4 as to why houses aren't being built fast enough. Number 5, right? We have restrictive and complex land use with planning approval delays across the board, right? In other words, I've got one development site right now in Karrinyup that it's currently going through WAPC to subdivide. It's been with them for a few weeks. It'll be with them for a few more months. Right? That's just the reality, right? What that means is when developers are going and buying old farmland and chopping it up into different housing estates, it literally takes years to get approvals through the local councils because of obviously the town planning. Now, if they were able to remove some of the red tape, now I'm not saying throw the baby out with the bathwater. Like, I do believe that there is valid argument to have some kind of regulation and making sure that not just building anything anywhere with no oversight. There still needs to be some form of oversight. But it does appear on surface level that the current regulation is actually making it unworkable, right? In other words, we're way too tightly regulated that we simply cannot build houses at the rate that we need to. Partly, and again, like I said, there's 4 other reasons here, but partly because of the delay it takes and the headache it takes to actually get everything approved through council. So if we could get a handle on the labor shortages, right? In fact, bring in more skilled workers. We could reduce and shore up our supply chains, right? And have an abundance of material. If we could make it easier in terms of lending, if we could remove half of the taxes, particularly the GST, when it comes to building a house, and we can remove some of the red tape through the local councils, we actually might have some workable solutions here to get more houses built, all right? But that's up for people with much higher pay grades than me. Now, in WA, one of the interesting stats that came out last month in October, there was a certain week where we had 2,832 houses for sale, which was the lowest on record. So generally speaking, in WA, we normally have, in a healthy market, we normally have around 15 to 16,000 houses up for sale at any one point in time. Last month, we had 2,800. All right, so that is the lowest on record. Again, is houses on the market housing supply? No, because they're already in the market. They're already established. They're already there. It's about the new houses that get added to the market. But again, it just goes to show that the people who are here in WA, the number of people soaking up the actual sales volume that's online just goes to show that, hey guys, we probably need to deal with the housing supply issue pretty bloody quickly. All right. But again, very interesting stat that came out last month. Now, when it comes to demand, so this is purely from the ABS, so the Australian Bureau of Statistics, and this is as of March of 2025. This is the latest data. We had Australian population growth of 423,400 people, all right? So almost 500,000 people. That was what our net population grew by in the last 12 months as of March of 2025. So from March 2024 to March 2025. Now, out of that 423,000 people, a quarter of them, 107,400 was natural increase. That was births versus deaths. 315,000 came from overseas. All right, so 315,900 people, which is practically 3 times the natural increase, came from overseas. Now, right now in the country, first-time owners are dominating the market Australia-wide, and that's thanks to the first-time owner, first-time guarantee scheme. There's also the first-time super saver scheme, and the other grants have been made available to first-time buyers to enter, kicking off practically a new micro boom within the industry. All right, and this is what I've been saying, what I was saying at the start of this show. Right now, first-time buyers are well and truly dominating. They're the ones who are actually causing the market to have this next little surge and this next little bump, which, good or bad, I think it's good to help out first-time buyers. I don't think it's particularly helpful to do that at the exact same time while we've got all these people fighting over a very small amount of properties. I think it'd be far smarter for the government, instead of dangling a carrot and trying to incentivize people to go and get these homes, I think an equally good strategy right now could actually be focusing on let's freeing up the supply issues that we've got instead of trying to increase the demand. But again, that's for pay grades much higher than mine. Now, in terms of median prices, right, and changes. Now, this is the data as of the 30th of September, 2025, as per CoreLogic. So the Australian median house price is $857,000, right? So $850 is the median. That's grown by 2.2% for the quarter, or 4.8% for the year. And the median rent is $672 per week. That is the national average. Every house in Australia put into one metric. That's the metric, right? So $850K, which has grown by 4.8% for the year. Now, Sydney is the price leader at $1.241 million is the median. They've grown by 2.1% for the quarter, 3% for the year, and have a median rent of $807 per week. All right, so that's the most expensive real estate in the country is over in Sydney. Now we've got Melbourne. So Melbourne is actually one of the cheapest. It's the third from the bottom. $805,000. It's grown by 1% for the quarter, 1.9% year on year, and has a median rent of $615 per week. So again, if you do want some cheap real estate, definitely start having a look at Melbourne. For Brisbane, $979,000. It's grown by 3.5% for the quarter, 8.8% year on year, and has a median rent of $696 per week. So right now, Brisbane is the second most expensive city in the country, and well and truly growing. I think that the growth there is going to happen well into the early 2030s, thanks to the Commonwealth Games. Now, Perth, we have a price of $855,000 for the median. We've grown 4% for the quarter, right? So that's the largest growth of any, well, actually second highest growth of all the cities. We've grown by 7.5% for the year and have a median rent of $729,000, right? So Perth practically leading the charge. We've got Adelaide. Adelaide's also sitting at $855,000, so it's the same as Perth. They've grown by 2.5% for the quarter, 6.2% year on year, and have a median rent of $633,000. Canberra, $885,000. That's the median house price in Canberra. 1.7% for the quarter, 2.5% for the year, and they've got a median rent of $680 a week. So Canberra's doing quite well as well. In fact, for those who are living in Sydney, if you do want to see change that's much cheaper, just move to Canberra. It's pretty close. For Darwin, so Darwin right now is the cheapest real estate. Median price $558,000 in Darwin. They've grown by 5.9% for the quarter, 12.9% for the year, and have a median rent of $687 per week. Now, as most of you probably aware by now, Darwin today has the largest or cheapest real estate, and it's growing by the best. Right? So right now, Darwin is actually the outlier in terms of performance. They have the best performing real estate in the country right now. Now, one of the questions from my team last week was, well, Corey, why the hell aren't we looking in Darwin and fighting to get properties there with tooth and nail? Now, the reason is, keep in mind, guys, when we talk about properties that are booming and when we talk about areas that are booming, does that mean that every single suburb is booming? No, it doesn't. It means that, when we see places like, say, for example, Perth right now that are growing by, say, 7.5%, so they are booming. In reality, 80% of the properties are growing. There'd be a small percentage, so let's just say 20% of the properties that would actually be going backwards in value. And that happens pretty much across the board. Then the next thing you got to consider is the ripple effect. See, when a city starts booming, it's generally the most expensive in the inner city that booms first, then the outer rim, and it continues to ripple out like that year on year. So the fringes generally start booming 3 to 4 years after the city's actually boomed. And so what you're finding right now for a lot of the cities that are actually booming, it's not the actual CBDs that are booming, it's the outer suburbs that are booming because the CBDs have already had the growth. Now, the same thing happens to these kind of cities. So if we've had, the Sydney market boom, the Brisbane market boom, Perth is booming, Adelaide is booming. Again, what you're going to end up finding is the following years, the minor cities start booming because the median starts catching up. This is a game of averages, right? Now, what that means is because Darwin hasn't had a lot of growth over the last couple of years because the major cities have, right now is their time to actually perform and grow. Now, the reason in general terms, while we don't normally recommend those areas or those minor cities to our clients is because those minor cities don't have the same levels of population growth. They don't have anywhere near the levels of infrastructure spending, and they don't have the same numbers when it comes to supply and demand long term. Yes, when they do go through booms, they boom like every other city, but they also plateau and stagnate for longer periods as well. So the minor cities are very much a boom really quickly, then plateau and do nothing, whereas your major cities are generally a little bit more consistent long term, right? And again, not to say that it's a bad idea to buy in Darwin. I'm not suggesting that. What I am suggesting is commercially for us to be recommending that kind of risk to our clients, there are better areas long term that are going to get them better performance. And that's fundamentally what it comes down to. Now, if you're someone who wants to go and buy a house in Darwin tomorrow, you want to go and hold on to it for a couple of years and then sell it, in say 2 or 3 years' time and just make that profit, go for it. Like that's a great strategy. Just be mindful, obviously, of your taxes and your entry and exit costs. But fundamentally, that actually could really work really well. The only thing you want to do, though, is make sure you get out at the right time and you're not kind of caught holding on to a bunch of properties when the market tanks there. And obviously with Darwin in itself, Canberra as well, there are some very big employment sectors that really kind of hold up the market. So again, anytime you're investing, and I know a lot of people who listen to this show would have heard of the examples of like mining towns. That's exactly why mining towns boom really hard, but then crash really hard as well, is because they're reliant on 1 or 2 sectors of employment. So anytime you're into a market where you don't have diverse employment, that is one of the risks that you are running, right? And that's obviously one of the main things that is up there in Darwin. And obviously being ex-Navy, I used to live up there. I was post up there for a little bit. I do know Darwin quite well. It is very heavily defence. Obviously, a lot of mines up there in terms of workforce. So again, very heavily reliant on only a couple of industries in terms of diverse employment. Now, finally, we've got Hobart. All right, so Hobart's median house price is $683. They've grown 0.1% for the quarter, 2.7% for the year, and the median rent is $584 per week, making it the cheapest place to rent in the country. So guys, that's pretty much where the stats are in terms of the current median prices, growth rates, and rents for 2025 quarter 3. Now, in other news, look, like I said, guys, I'm fairly confident that this boom is not going to end anytime soon. And there's a couple of reasons why. Like I've sort of alluded to, number one, we're not building enough houses. Number two, we're importing way too many people. And I say that as an immigrant myself. I do believe in immigration. I think immigration is a great thing. I think that having a diverse culture and economy is always most cases is a positive. However, booms never last, just like busts never last. So every time we go through a boom, what comes next? A bust. When there's a bust, what comes next? A boom. That's how the economy works. Now, most people, and when I say this, if you are one of my listeners who've been listening to this show for a couple of years and you still haven't bought a property, this is who I'm talking to. You would be considered what we would call the late majority. All right. So if you still haven't gone into the market, you're still waiting for the right time, you're still anticipating for the market to kind of come down a little bit, or you just want a little bit more confidence that your money is going to be safe, you would be deemed what we would call the late majority. Now, the late majority is when the let's just say the second half of the population now think it's a really good time to get in a property after the first half have already got into the market, right? This is actually a very dangerous game to play. Why? Because when you enter the market, you're generally entering the market after the market's already got a lot of gains, and you're expecting it to never end, hence why it's called the winner's curse, right? That's the phase of the cycle that we are going to be approaching within the next year or two. Now, the winner's curse is when the market is booming, everyone's making hand over fist in terms of money, and this is when the majority of people, and in fact, I kind of like to have a joke about my parents about this, right? When my mum calls me and tells me about something, that's generally when the late majority are now aware of it, right? And I say that kind of to take the piss out of my mum because she's a little bit, obviously she's older than me, and that's my way of taking the piss out of old people. But the point is, when the majority of people, like when your grandma, your auntie now tells you, oh, you should really consider buying property, and they're someone who doesn't really pay attention to property, that's kind of the writing on the walls to when the late majority are now aware that this is actually a good move. This is generally when we are heavily investing in other places, not just here, right? Now, really what I'm saying here, and the reason why I'm bringing this up, is because I'm trying to give you guys an idea as to when this will actually end. Now, the reality is, obviously, there's no crystal ball. Even someone like myself who pays attention to this stuff every day, like I can't tell you when the boom is going to end. However, I can tell you that we can't even see the light at the end of the tunnel right now. And there's a couple of catalysts. Like I said, in terms of population growth, it's huge. In terms of housing and building construction, it's terrible. We can't build enough houses. However, here in WA, we have a very interesting economy because we are heavily reliant on the mines. Now, does that mean that the mines the be-all and when it comes to our property market? No, it doesn't. It means that when we have a huge demand for our resources, right, in terms of minerals, iron ore, you name it, wool, whatever, when there is a huge demand globally and we've got the ability to sell a lot of our commodities overseas, right, in terms of exports, it makes Australia and WA in particular a lot of money, particularly in GST. And this is one of the things that we see on the news, all the time in terms of, just fighting over the fact that most of GST comes from WA, right? In other words, WA is probably the main, like we are the bank fundamentally of Australia in terms of our resources and what's in our ground. Now, for those who saw, Trump and Albanese have made a deal over the WA resources, right? And again, I can see the good things in this. I can see the bad things in this. The good things are the fact that it means that the US actually has a demand for the resources that we have here in WA. Why is that good? They've got a massive economy. They spend lots and lots of money, and it means that more money will flow into our state and our country because we're selling lots of exports to that country. So that's a good thing. In other words, that will actually help continue and hopefully actually increase the demand for our mines and our resources. In turn, it brings more people here, more money here. Our property market continues to boom out of control. I can see some bad in this too, right? And the bad fundamentally comes from my problem with globalization, right? And for those who've been paying attention to this show for quite some time, we've been living in a world where we are, let's just say that we sort of know each other by country, right? And we are more of a, we are living in more of a nationalist kind of world in sense of we've all got a country that we live in, we all represent our country, and right now it seems like it's the country versus country is pretty much most of the conversations we're having. Whereas there are powers that be who want to globalize us. In other words, have a one world government, remove all the borders, and implement a different system. I think that this deal is kind of what the globalists do want, right? And I can definitely see some I can see some issues that can happen if we continue this pathway of allowing, billionaires on the other side of the country, other side of the world for that matter, kind of dictate what we're doing with our resources. And I can see some problems in that, right? And again, I'm not going to, this is probably this is probably worth having an entire podcast on another day just to talk about, right? Because there's a lot to say about that. But I think overall, the fact that Trump is already eyeing off our resources over here, for the average punter here in the state, in terms of property prices, in terms of wealth, in terms of, financial, I think this is actually a good thing overall for the average punter here in WA, assuming you've got properties and you want those properties to keep growing in value. All right. Now, secondly, the second part to this deal that I've been doing some research on, it really is about China, right? And obviously since COVID, one of the things that's been sort of really, really on the forefront is the fact of how reliant every country in the world is on China for their materials. Now, right now, pretty much most of the critical materials actually are processed in China because of the cost, the wages, and fundamentally safety, right? So if we were to try and produce some of the materials from raw to workable here in Australia, it simply wouldn't fly in terms of work health and safety. So what does the Australian government do in their wisdom? They sell it overseas. They let the poorer people in China, and I say that with respect, right? I mean, I'm just saying this from a median household perspective. Where it's cheaper wages, they've got way less regulation in terms of work health and safety. We just get the Chinese to go and do it, and then as soon as it's produced, they then sell it back to us at a higher cost, because the cost of us doing it ourselves would actually negate that, right? So whether you agree with that or disagree with that, the point is we are extraordinarily heavily reliant on China performing. Now, if China turns around and decides that, hey, look, because they're the new superpower, in 10 years' time, and they want to start, really throwing some spanner in the supply chains around the world, they've got the ability to do that because they fundamentally monopolize the production of these raw materials. So I do think that part of Trump's plan here is to circumvent the production in China and try and disperse that around the world. But it's very interesting, and I think it's actually a positive thing to note that he's eyeing off our resources regardless. And no matter which way this goes, if the plan ends up being that the minerals and the materials come out of WA's ground, it just means there's more money for us. All right, there's more wealth, there's more people who want to come here, there's more infrastructure spending, there's more money we can spend in society, and again, in theory, assuming the government doesn't blow this like they blow a lot of other things, it means that, we'll actually have more wealth here because of this. So more wealth, when we're already booming, when stock prices are high, when property prices are high, all I can really see in terms of writing on the wall, this is just going to prolong our boom for longer than what I thought. Again, that's if all this stuff actually comes to fruition, which we'll see. Now, I guess kind of the final piece of this puzzle, in terms of the like where we're kind of going in terms of the minerals. One of the interesting topics that's come out was Bill Gates has just admitted that the whole idea of human society fading away due to climate change is actually no longer realistic. I'm unsure how all of this fits in with Albanese's plan of net zero. I mean, if we are going to continue ripping all these minerals out of the ground and we're going to continue selling them overseas so that cheaper countries with lower incomes and more relaxed work health and safety to produce them and sell it back to us, we're not really kind of dealing with net zero. We're not really, to say that our supply chain is environmentally friendly, considering that all we're doing is just kicking the can into another country and letting them do it, still going to the same planet. I mean, we all live on the same freaking planet, still the same air. It's kind of moronic. However, I do believe, just from what I'm sort of seeing online and, my own personal opinion, I do believe and I do hope that the days of this kind of net zero policy are at an end. I can't see this continuing. In fact, I do think that if we do continue this deal with Trump, I can see writing on the wall of Trump forcing Albanese to remove net zero in this and just put this entire policy in the bin. In fact, it wouldn't surprise me if this becomes one of his conditions, in terms of working. So again, whether the left-wing ideology of climate change ends up winning, or having Albanese's government earn more money because of these massive trade deals with the Western Australian commodities, I guess we'll end up finding out what's more important to the guys on the East Coast. All right, but anyway, guys, that's pretty much it for today. Thank you all for listening. I love you all very much. Look forward to speaking to you again. Thanks.